Disney. That's our chart of the day because it's soaring. Best day since February 8th of this year. About $15 billion in market cap. It is leading the Dow today. There's a stock up 7%. You just don't see it move like that. 8th straight positive session. That's been the longest rally since July of 2018. Jim Lebenthal, he joins us on the phone because we need his point of view on this. Is this about the guidance and the magnitude and I guess the visibility that they think they have?
Well, I think it is that, Scott. First of all, thank you for having me on, Your Honor. I think this was all around a great quarter. You got a beat, you got a raise. You also got better performance from the experiences, the theme parks, which if you'll remember, the last couple of quarters, there's been some concern about that undershooting expectations. I've said that I thought that was just a cyclical downturn. That appears to be the case. They are predicting growth there. Growth that's higher than expectation. And by the way, earnings per share growth for the next 3 years is looking higher than expectations. You know, finally, the streaming business came in much better than expectations. That's a high margin business. There is a lot to like about this report. I think it's going higher from here. The swoon in the spring and summer was on that theme parks disappointment, which is looking like it's going to be rapidly in the rearview mirror.
They don't just generally have the ability or maybe the desire to try and give guidance for that far out. But that seems to be one of the thoughts today, that they feel comfortable enough to do that. And it's being deemed good enough that that's why the stock is up to the degree it is.
Yeah, it's a little bold, honestly. I mean, they're putting out quasi-quantitative numbers of single-digit growth this year and then double-digit growth in earnings per share the 2 years after that. That's a long time out there to predict. Obviously, they feel confident in it, and that's, double-digit earning per share growth is not priced into the stock, in my opinion, at this multiple. Now, I say this multiple, it's around 21 times this year's earnings, but estimates are certainly going up. Mm-hmm. So I really think you're getting it at the right price here for those growth rates. Even after the rally you've had, I think you should be buying it here.
Hey, Jimmy, the big thing to me, the big positive to me was the reversal of fortunes in the direct-to-consumer segment, the streaming business. So we were hearing everywhere last year, streaming's a bad business, it's a bad business. But turns out it's not so bad when you have some consolidation and you have some companies basically give up. And Disney was never going to be one of those companies. They stuck it out. They rationalized costs. $321 million in operating income for this segment in the quarter versus a loss of $400 million in the same quarter last year. I think we're out of the woods on streaming profitability. We heard good things actually on profitability even from Warner Brothers. What do you think, and what are the ramifications going forward for this stock?
Yeah, look, I've been talking about streaming for quite some time, and Josh, I think they are out of the woods. So it's not just that they turned profitable earlier and with greater size than expectations. It's that the expectations for next year and the years thereafter in terms of the estimates are simply too low for streaming.
Yeah, still low.
You have to understand something, and I know you do. I'm just saying in general, you have to understand this is a high incremental margin business. All right, the streaming operations don't work any harder. It doesn't cost them more as they add 4 million subscribers, and they did add subscribers this quarter, which is good as well. So, they're seeing a lot of uptick from the ad-supported tiers. Those incremental margins are tremendous. That's what I love about this business.
Well, the executives are pretty positive. They're talking, quote, a significant growth area continues to be streaming, they say. Let me get you quickly on